death benefit is important. I don't care if you think so or not. I think so. And so if you want to come in and say, my wife's going to be okay because she'll just marry a sugar daddy next time and she'll have all kinds of money and she'll be able to sell my land and my equipment and my cows and she'll be just fine. Okay. What is stopping her from going to find that sugar daddy right now? That's what I'd like to know. Because if that's how much you think of your spouse, to not leave them something and take care of them, then ladies or spouses, because it could be the other way around, right? Maybe you should go start searching for that sugar daddy. Hello, and welcome back to the podcast. Thank you very much for being here. All right, today let's talk about getting started. And where do I start and how much do I start with? And is too little too little? And so I had a meeting today with somebody that had called another agent. And of course, they didn't ask him hardly any questions. How much money do you have? How much do you have in payments? It was like, I don't know, a few minutes of questions, not even a half an hour. And they said, oh, you don't have any money to get started. Call us back in a year. And I do tell people that sometimes. I am honest. I am not going to say, hey, you should start and you don't have the money to start. But I do that after an hour to an hour and a half conversation. We're not doing that after a couple of minutes because how do you get to know somebody in a couple minutes? But this is interesting. So I suggested, hey, you can do like $6,000 a year. There are times based on age that we can start a policy at $4,000 a year. And that is, now I'm talking like somebody under probably 35, we can do $4,000 a year. And then of course, the older you get, I need to have enough whole life portion of the policy to even write a policy, to even issue a policy. The older we get, the more expensive that gets. And so if you're somebody that's, I don't know, let's say you're 50, well, then I'm going to probably need $8,000 a year or $6,000 a year. It just depends on health and all these things. Anyway, the moral of the story is that you can start small. You don't have to start ginormous. And frankly, most people do start small, even if they make $3-4 million a year. I've had clients that have made upper, $15-20 million a year, and they still start with a premium that's like $100,000. It is rare to have somebody jump in with both feet. And so I got an email too that's like, well, how small can I start? It's like the day of how small. How small can the policy be? Some people think, though, that if it's too small, there's no point in even starting it because I'm never going to get anywhere. I need more money than that. That might be the case if you're 65, okay? And I say might because if you start a policy, even at 65 years old, we're creating death benefit. And if you say, hey, Mary Jo, I don't need death benefit because I don't care if my heirs are going to get money or not, then you probably should not be my client anyway. You should probably go find somebody else because there is death benefit attached and death benefit is important. I don't care if you think so or not. I think so. I'm the one over here writing life insurance. And so if you want to come in and say, my wife's going to be okay because she'll just marry a sugar daddy next time and she'll have all kinds of money and she'll be able to sell my land and my equipment and my cows and she'll be just fine. Okay. What is stopping her from going to find that sugar daddy right now? That's what I'd like to know. Because if that's how much you think of your spouse, to not leave them something and take care of them, then ladies or spouses, because it could be the other way around, right? Maybe you should go start searching for that sugar daddy. Okay, probably not the best advice I've ever given on here, but come on, people. Let's get real. You're gonna die. And do you really want your spouse to end up selling everything at a fire sale? Do you want her to be the recipient of a GoFundMe account? I've talked about this a million times. No, your job is to take care of one another. Wife, you should have a policy for your husband. Husband, you should have a policy for your wife. Okay? You should have a policy for your spouse. So if you cannot, at least if the cash value is not going to be there, and you're like, geez, Mary Jo, I need millions of dollars and I'm 65. Well, guess what? We can at least start the generational wealth piece of it. And that is important. That is us saying, hey, let's make it a little bit easier for you to hold on to the farm. We are not leaving anybody rich over here. We are leaving them with enough money so that they can maybe not have to borrow full operating. They can have a down payment for land, whatever that is. But so many people think it's all or nothing. If I can't afford something big, then I can't do this. I was talking to a guy this morning, and he said, I only have, I think he had like 67, he had about 130 acres that he was able to work with. And he said, sell by marketing is just not okay for me right now because I'm really small and I need to get bigger. I said, well, my new friend, guess what? You can start sell by marketing with a small amount of head of cattle. You don't have to have 100 head to do it. You don't need to have a feedlot to do it. I have clients that are doing it in very small acreages. It's okay because guess what? If you do it wrong, it's at a much smaller scale. Okay? And you've learned at a smaller scale. Then you're a pro by the time you get to the big level. We can slowly grow into it. It is by us saying we can't start infinite banking, we can't start sell by, we can't start farming, right? There are people that I have talked to that have said, well, I can't start a ranch. I need like 14,000 acres. I'm in Nebraska. I'm in Wyoming. I need 14,000 acres or it doesn't pay to ranch. Really? Because, not everybody has 14,000 acres. And so there are places that have much smaller operations. But this is that all or nothing mentality. We have to go all in or it's just not going to work. Or it's going to work better for somebody else because they have more money. Is it? Because here's the thing, and you guys have heard me say this a million times as well. If you can't manage $1, you can't manage $1 million. So if I have somebody that can manage dollars more than they can manage millions, guess who's in a better position? The guy that can manage dollars. I looked the other day because I was listening to something and they were like, oh, this is what your profit margin should be. I think it's like a 30% profit margin or something. That's really good for a business. And I looked at my profit margin and it's above 30%. Why? Because I'm cheap. I pay my staff very well. But guess what? I'm not taking somebody for a steak dinner in hopes that they're going to buy some life insurance from me. I'm not doing foolish things with my money in hopes that, I can save a little bit of money on taxes. Or I can wine and dine somebody to do business with me. Nope, that's not what happens over here. Instead, the money is in my account. And that can be used for more marketing. That can be used to expand the operation. That can be used for a number of things. And so if we can slowly get there, if we can manage dollars and start multiple policies, that's awesome. I met with a 14-year-old today. This was actually quite exciting. I didn't even know how to talk to him. Let's be honest. It's not like I see 14-year-olds every day. He had a really good question. He said, well, how many policies can I have? At 14, he understands the concept, right? That we're going to have to build a system of banks. You don't see one bank on the street corner. And no, you see them on every corner. They have branches all over. Because if it's convenient for me, I'm going to bank at that bank. I'm going to put money in and then they can lend money out. So Nelson had 49 life insurance policies. I have colleagues that have many more than 49 life insurance policies. I personally do not have more than 49. I don't even have close to 49 policies because I don't want to manage that many policies. I just have bigger policies The older I'm getting and the more I'm understanding the infinite banking concept, I just start bigger policies because then I don't have to manage so many little ones. But if you really get the concept, you're going to start and you're going to build onto it. I think John said this to me one day. It's like building a windbreak, right? You have multiple trees. You don't just have one. You don't just put one tree in the ground and go, do your thing so you can block the wind. No, you're building a system. And so that system is going to start small, and then we're going to get bigger and bigger, just like your operation did. You're going to start where it's comfortable. You're going to buy the number of cows that you need to buy. And then you've got a fairly decent sized herd. You've got a fair amount of ground. You're going to buy the ground that you can afford to buy. And I don't care if that's 10 acres. I don't care if it's 40 acres. And then, now we can buy 100. And now we can maybe buy the next piece that's 200. And maybe we buy another 100. Who cares? We're buying what we can expand with. And that happens over time. None of that happened overnight. And so there are times, keep in mind, I'm not dissing this other agent at all. I am saying, hey, maybe you should have had a longer meeting so you could understand this guy. Because like this guy said, I'm not an idiot. I know where my cash flow is going. And keep in mind, this particular potential client had done 2 years worth of research on infinite banking. He had read my book, Nelson's book, watched many, many videos. He was extremely well-versed in what he needed to know for infinite banking and the utilization of money. So by them not giving him the time was a bit disheartening. However, to say it's too small is crazy because there are people that I have heard say, agents that have said, if you can't start with $10,000 a year or you can't start with $20,000 a year, then you may as well not get started. What? I'll do a policy that's $3,000 a year. On my 14-year-old today, we did $1,200 a year because he's going to get his first job and that's what he wants to do with his money. How awesome is that? Yes, his parents have to own the policy, but he is the one that's going to be paying for it because he's going to get a job. And this is the other thing that's super exciting is he bought that policy before he got the job because he's going to need a place to warehouse wealth. How many of us are thinking about that? Now, granted, I get it. He doesn't have a whole lot of risk. He's 14. But if he's already thinking about where do I warehouse my money, then he's going to be successful. There's no doubt. He is already considering how money works, and he has been for a long time. Because this kid is like over the top smart about watching YouTube videos, and everywhere he goes, he's like, what was the cost to build that building, Mom? How much do you think it cost them to run that building a month? Like he's very, very in tune with business. But he's already at 14 thinking about how can I build my system? How many of these policies can I have? That's not even an average adult thought. The average adult is like, man, let me get started. And I think that I have shared with you guys before that I can tell when I meet with somebody, okay, we have to be very conservative because these people are not super motivated, right? And typically those people don't become my clients, in all honesty, because they don't even have the money to get started. But there are, and we've talked about this, that there are people in life that you knock them down, they're just popping right back up. Like they don't care. Once you know how to make money, you can't not make money. It's not a rule written somewhere. But I have come across enough people that have been to the top and back down again, and they just go right back up to the top because they understand how to use money. They understand how to build. They understand that they're not going to go from the bottom to the top overnight. It's going to take time. Same thing with your policies. You're building a system. You're going to start with yourself. You're going to do something on your kids or your grandkids. Maybe you're going to start with mom and dad. And then you're going to do something on yourself because mom and dad are going to technically pass first. So now we've created the generational wealth. And so if mom and dad aren't doing anything, how are we starting? What does that look like? Obviously, all that stuff we talk about in a meeting. Yes, there has to be money on mom and dad. So if $20,000 of premium, which is typically what I need for mom and dad in their 60s, I'm going to need about $20,000 a year for premium. So if that's the case and you can't do 20, then that's not an option. And we have to go to something affordable for now. And then we can possibly add them later. So where do we start? What does that scenario look like? Those are all things that I'm looking at when John and I are both looking at that when we have a meeting with you. Where is the money going? How much can you afford? What's comfortable? What's going to be not comfortable? Right? That is what's going to help guide us. But to say, I can't make an appointment because I don't have money, that is not accurate. Or I can't get started because I don't have money. You don't know if you have money until you make the appointment because how you use money is going to determine if you have it. Just like this gentleman. One agent said, you don't have it. I come in and say, oh, you're paying a cash for a lot of stuff. So we could move some of that money into a policy and then you could start borrowing against that in order to get started. Different utilization of money, something I'm looking for that another agent is not looking for. So there you got it. That's today's podcast. Pod. Have you heard the new word? All these millennials, hey, gonna listen to my pod? What? Like, you know what a pod is? A pod is one of those little tin cans that you went to class in because the school wasn't big enough. So they put a pod outside of the school and then you would have to go into that thing. And here in North Dakota, you would be in class in that thing in the winter. So I never had to go to school in a pod because I'm too old and we actually had room in the schools. But I know like younger people have, like my daughter, she has not been in a pod either, but there have been classes in pods. So they're calling podcasts now, pods. Please don't use that with me. I'm a Gen Xer. I would like to use the word podcast. I think it's funny. Millennials shorten everything. It's like it's too much energy to talk. I don't know. I'm trying to figure it out. If you're a millennial and you're listening, let me know why you guys shorten all your words. This old lady is going to call it a podcast. All right, you guys. If you need anything, you know where I'm at. Mary Jo at withoutthebank.com. Grab your book, set up your appointment with John or I so we can help determine if you can get started. And then we'll see you in the next podcast.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.